Welcome to this special interview with Brett Kelly. Brett is the founder and CEO of Kelly Partners, a unique and growing listed accounting business built on the principles Brett has learned from super investors such as Warren Buffett and Charlie Munger. I'm really excited to unpack and dive deep on this with Brett, but there's also so much more to hear from him. Brett has more than 20 years of commercial and professional accountancy experience. Brett founded Kelly Partners in 2006 and since then has grown the business to become the largest private business specialist accounting network in the Greater Sydney area. Brett is also a best-selling author, podcast host, and keynote speaker. There's so much to learn here, and I don't think there's any more introduction needed. So without much further ado, Brett, welcome to the Australian Shareholders Association, and thank you for joining us at our Investors Summit.
Thanks so much for inviting me.
Brett, at the young age of 22, you were working in investment banking, and correct me if I'm wrong, but you faced probation and subsequently lost your job. I've heard you say that this was the best thing ever to happen to you. Can you talk us through that journey? Go from losing your dream job to becoming an author and then founding Kelly Partners.
Yeah, so Lee, it's a interesting, funny story. I grew up in a family of 7 brothers, 5 brothers, 2 half brothers. I was a kid in the middle of that big gang who came first in everything. I left school, did an undergraduate cadetship at Price Waterhouse, and then joined an investment bank, which was Schroders. And on the 30th of June 1997, the boss said that I didn't fit in with other people, and he, redeployed me to reflect on my future. I wasn't sure what I wanted to do. I was in Morgan and Bank's outplacement service with a floor full of exclusively men in their 50s, and I started to ask them, how they were going, what had happened to them. And as so often happens, if you're in a bad place, it's better to find people in a worse place. I was living at home. I had money saved. And I found that these gentlemen generally were, had the full disaster. They had mortgages, kids in school, and all the rest of it. And not only people taking their business card, but they'd taken their sense of self. And so they were really in quite a bad place. I went home that night. I told my dad what had happened. He gave me 2 books called How to Win Friends and Influence People and Napoleon Hill's book, Think and Grow Rich. And in reading those books, that sort of, I had these degrees and things that I was studying, chartered accounting and other things. And what I didn't have was I hadn't been taught how to manage and lead people, how important it is to work with people to achieve what you're trying to do together, and how important it is to think in the right way about, who you want to become and the type of life that you want to live. And so reading those books, I went back to Morgan and Banks. I was sitting there reading, and then I got this idea because I really genuinely didn't know what I wanted to do. I got the Who's Who of Australia, a little book, and I wrote a list of 80 prominent Australians that I thought would be good to meet to find out what they'd done and how I could use that experience to think through what I might want to do. So I wrote a letter, said, my name's Brett Kelly, I'm 22, I'm unemployed, but I'm keen to learn. If you'll spend an hour with me, I'll get it out in a book for other young people who are looking for ideas. And after about 5,500 phone calls over a period of about 12 weeks, I got 34 of them to speak to me. And not only did they speak to me, but in meeting them, they really changed my perception of what was possible. I raised the money. I spent my entire life savings on that book, which, I came to understand that learning and investing in yourself, as Buffett says, is the best investment that you can make. And so I spent my entire life savings. I'd been working since I was 14, washing cars and mowing lawns and working in a tourist shop down in Darling Harbour and then working as an undergrad and whatnot at PW. And put that into the book. I then needed $21,000 to print the print run of 5,000 books. I went to a good friend of mine who I was working with at the time, introduced me to 7 people. They each lent me $7,000, $3,000. So I had $21,000 to print the books, and I printed the book, self-published the book, and it was a best-selling book when it came out. I put a team together of graphic designers and proofreaders and editors and PR people, and I learned that if you put a team together of people with 30 years experience, then you'll have all of their experience. So I had a couple of 100 years of experience working on my book. It turned out to be a really great learning experience. I learned that, if you've got a big vision and you get people around that vision that believe in what you're doing because the idea makes sense and will make a difference, then they'll help. And that you then raise the money, and the book came out. I paid all those people back off the first print run. We sold basically every book in 3 days when the book was featured on A Current Affair. And I was sort of off and running, did a lot of professional speaking off the back of that, sharing that story. And so it completely changed my life, mainly because it gave me the freedom to pursue my dreams and the confidence during that process to make things happen that I wouldn't have had if I'd stayed on a more conventional path. And so, I went back into chartered accounting, and as I sort of, I've been reading everything Warren Buffett had written since about 1995, 96. And so I was just trying to learn and study and understand how the world worked. So that turned out to be, losing my job turned out to be a completely life-changing experience in a very positive way.
Yeah, I mean, it's so profound that you, were in what would be considered a very good job, and then gone on this incredible journey to write a book and really, sound like quite a driven individual. But then you've pivoted again and started Kelly Partners. So from being an author and a speaker, how did Kelly Partners come about, and how is it different from other accounting firms?
Yeah, very funny. I read a book, I think it was written in the 18 or 1900s, and it was a sermon that was titled Diamonds Under Your Feet. So now I'm reading a book a week at least, and I'm trying to absorb everything I could about, what life is all about. And this writer talked about, often people are always looking sort of next door for the best opportunity, but often there are diamonds right under your feet. And I was in chartered accounting. I knew it was a tremendous industry, massive industry, not really understood as one, but that the businesses themselves were not very well run. And so I thought, well, what would happen if you, rather than look at what accounting firms did, just look at what the world's best businesses do and apply that to accounting firms. So I'm sitting there thinking, okay, well, all the baby boomers are going to retire. They all own the accounting firms. Most young people can't work with old people because they're arrogant, frankly, towards other people, and the older guys are arrogant towards the younger guys. And so there's a bit of a marriage broking opportunity there where I could use my M&A skills. And then also I knew that governments on both sides, across all Western countries, were facing shrinking populations. They don't have the political will to stop spending money. In fact, they just love to spend money, which means there's got to be more tax, not less, which means more accountants, not less accountants. The big global multinational companies, they've got ways to move money around so that they're not really affected by local countries' tax systems. But the people that employ 70% of all Australians are people like my dad that had his own private business, and they mortgage their houses to build a business, and they and they're the only ones really that have any money. So the tax office will be after them. They're the people that I have a real passion for. That I believe that creating employment really makes a difference to the dignity of people's lives to have a job. And I really wanted to help those people. A lot of people think that to help the small person, but in fact, if you help the employer employ more people, then that actually makes a real difference. So I sort of had this mindset that accounting firms were great businesses, badly run, and that we could probably improve that. I wasn't confident that we could be better, but I was definitely confident that we couldn't be worse. I'd worked in firms where they just weren't well run. The proposition for a young, smart, driven employee like me was appalling, frankly. The partners themselves were miserable. The client outcomes were average at best. And when you looked at the world's best businesses, so businesses like Four Seasons or Ritz-Carlton, or McDonald's or Walmart or Apple or Berkshire Hathaway, none of these accounting firms, frankly, could hold a candle to those types of businesses. And since 95, 96, I've been reading everything that Buffett had written, and I was just inspired about business because it's what I've always been really interested in. And I thought, well, what would happen if you had a firm that specialized in looking after the people that own private businesses and went very deep Walmart style in New South Wales? So we'd go around the city before we went into the city. So, Sam Walton in his book Made in America said, go to the small places that nobody else wants to go and become big and operationally excellent before anyone notices. And then Ray Kroc from McDonald's said, you know, the only time to act like a big business when you're a small business, to get really excellent in terms of your proposition. And then ultimately, you know, I saw a $12.5 billion industry in this SME private business owner space. It was very underserved and very underserviced. I believe that we could build a model that would be very, very different. So I came up with this thing called a partner owner driver model. I got it from extensive reading in terms of what private equity firms had done with sort of 50-50, or in our case, a 51-49 model. I studied what hadn't worked in the industry with companies like Hardstoppers, WHK Count Plus, where they ran a traditional roll-up where they bought 100% of a business. They took on all the responsibilities and left everyone else with the rights. And they weren't experts at running true partnerships. And frankly, they were just financial promoters, and said, well, hang on, if we had a 51-49 partner owner driver model where the operating partners day to day only have to look after their people and their clients, we could give about 40% of their time back to them. I believe we could double their profits, take, you know, return 2/3 or use 2/3 less working capital. So the financial model would be very strong for the partners. The model for the clients, we could design, you know, a proposition for the clients would be very different, and we could create a much better environment for the people, like the young people, person that I was when I joined these firms, so that they knew that if we could grow strongly the firm, they'd have strong opportunities for their careers, and that the whole business should be set up as a talent magnet where we would find, like, attract, develop, and retain the best people to do the best work for the best private business owners in Australia. We'd start by first trying to own that market in New South Wales, and then grow into Victoria and Queensland, which we're sort of now doing. So, you know, it's a very deeply thought out model. Importantly, you know, a clear mission to help private business owners be better off, to help our people and help our communities better off, clear values around being people for others, doing what you say and working as part of a team, a clear vision to be a world-class business, not just another accounting firm, a clear strategy to become, you know, private client only, focused on New South Wales and go deep before we go broad, a clear structure that we've invented and owned and done now more than 60 times in 60 transactions, 31 offices, which is a 51-49 trademarked partner owner driver model, and then a clear proposition around people, process, clients, financial, digital, risk, brand, growth, and exit. A thing we developed called the Progress Pyramid, which we've also trademarked, which is a systematic way to improve and grow a business. That we thought that if we went about building a methodology for doing the business, that we could go deep, and over time we could go high in building what we hope will be a very substantial business over the long term. Now, we've compounded at about 30% a year, every year for nearly 17 years in a row, which means we've doubled the business 5 times in a row every 3 and a bit years. So we think we've got a methodology that we're proving works. And anyone with a spreadsheet can work out sort of where that ends up if you keep going. And we are in an industry where there's more 100-year-old accounting firms probably per business than there is in any other industry. So it is possible to build a 100-year business, you know, very inspired by Jim Collins' work in Built to Last, and create something that is quite special and meaningful in terms of its, you know, impact on the profession, on the communities that we're operating on, and certainly operating in, and certainly the clients.
Yeah, I mean, it sounds amazing. There's so much to touch on there, and when we are going to try and capture more of what you've just gone through. I think I want to step back and just talk a little bit more about what you've learned from Warren Buffett and Charlie Munger. We've already mentioned them a couple of times and how they've been very influential to you. You've been to Omaha to go see the Oracle in person. Can you tell us a little bit more about how Buffett and Berkshire have helped shape you as a leader and helped really influence Kelly Partners? I mean, we've heard about the models, but maybe a little bit more about the culture and you personally as a leader.
That's very interesting. So I think he's an incredibly interesting person, and he has, Warren himself has said that, you know, he really thinks that if he was known as anything, he'd like to be known as a great teacher. I feel very humbled and privileged that a gentleman like this has made such an effort to share what is deep wisdom. When I lost my job at 22, the first book that I wrote was called Collective Wisdom, and the idea was to get around and aggregate the wisdom of others, because I knew I didn't have any. And, you know, in terms of a life goal for me personally, it's about, you know, growing in wisdom. And so, you know, I've met a lot of smart people, but I've not met as many people that are wise as you, I guess you'd hope. And so that's a high bar, wisdom being really growing in really deep understanding. So first book I read on the stock market was Philip Fisher's book of Common Profits, of Common Stocks and Common Profits. And that is the book that sort of led me to Buffett, interestingly enough, because I believe at that time it had an endorsing comment by Warren, and sort of off I went. Even more influential than Warren, though, was Charlie Munger, because Charlie Munger started a law firm called Munger Tollers. And I was looking at our industry saying, well, you know, how did Charlie Munger go from being Charlie Munger, a sort of magna cum laude, a graduate of law from Harvard University, to starting his law firm, to becoming one of the world's greatest investors? And so I looked very hard at Charlie, and I looked at Warren, and sort of, to me, sort of different sides of the same coin in terms of different strengths and complementarity. And so I said, okay, well, ultimately, I want to be an investor. I think the world's best CEOs are investor CEOs in terms of their mindset. And so, you know, what did I learn from these guys? Well, firstly, you know, seek wisdom. Secondly, be very super long term. You know, I was a young person, so they were saying to me, and I always regard them as literally speaking to me, which is funny. You know, what I call my sort of virtual mentors. And you know, basically they were saying, consider every decision you make in the context of 20 years. You know, be super long term. And so we at Kelly Partners talk about being long-term people in a short-term world. They talk about being very contrarian, so know your deep principles and stick with those even when there's a lot of noise. Run very hard an inner scorecard. So, you know, your own conscience and the way that you think about yourself and your own values is much more important than what other people might say about you. And I must say, Lee, in terms of growing the business, you know, we've built a business system that happens to be expert at acquiring and improving and growing the prospects of the people, clients, and communities of chartered accounting firms. It's a business system as opposed to, you know, an accounting firm. That's not understood by most people, but that will become more obvious, we believe, over time. And that's very much, you know, sort of the Buffett mindset. He said, get into a business that will be there forever. So death and taxes. I was there, diamonds under my own feet. I'm in taxes. I'm like, okay, well, that's a Buffett business. It'll be around forever. And I did find out that in the 70s, he'd actually invested in H&R Block, which also gave me quiet confidence. I wrote to Warren when I was writing my second book called Universal Wisdom, and he kindly signed my copy of Warren Buffett Way and sent it back to me and wrote me a beautiful letter. That taught me that, no, you know, at that point, I think he was the second wealthiest man in the world. And I thought, well, if the second wealthiest man in the world can make time for me, no one from nowhere, and write me a very nice letter and sign my book, then that's a good example of a way to be in terms of humility and approachability. Very determined person who's really stuck to what he's doing for a long, long, long time. And I think that, you know, there's virtually no part of his life that we can't learn from. So I've just found him to be a very inspiring person that challenges you to, you know, as he says, get around better people because they'll make you a better person. Now, I couldn't get around Warren or Charlie because, you know, I don't come from anywhere in particular, but they have been so generous in how much they'd written and collaborated with others who'd written about them that I never felt like I needed to go and sit down with them because there's so much that they'd shared. And when YouTube became a thing, there was so much on YouTube. I've watched every video that they've ever published multiple times. And so, you know, that's the difference that they've made. So, you know, I basically picked up you know, their ideas, write an owner's manual, treat your partners, internal partners as partners, treat your external partners as partners. Have a genuine spirit of partnership in terms of what you're doing. Don't put yourself in front of others, and believe that you can build a reputation over the long term that ultimately is the most important thing. So that's what we did. Wrote an owner's manual. We write quality shareholders letters to try and make sure that our partners understand our principles. We're trying to communicate that we're very long-term people that are very, very determined as he is. You know, we hope and we expect that if we continue to operate that way, that our prospects are quite strong over the long term.
Indeed. And Brett, again, so profound to hear the talk of longevity and long term, focus on the long term, building something, for 20 years down the road, maybe even longer, 100-year business. And yet, you've compounded at this great rate at the same time, and we're not focused on, the last quarter's earnings or 6 months, and yet it's paying off in the short term as well. And I know we're sort of deviating from our set questions here, but what do you think about that? This long-term mindset is working beautifully in the short term.
Well, interestingly, it's not always been like that, Lee. Like, we listed at $1, 10.9 times NPAT. I wanted to come to the market at a price that I knew dramatically undervalued on an intrinsic value basis, the business, so that anyone that invested with us could never lose money. If they bought our shares and stayed there, I was very confident that they would never go backwards. I couldn't be sure if they traded our stock, what would happen, but I was confident that if they wanted to be a long-term, what we call a quality shareholder in the terms of Buffett and Lawrence Cunningham, if you like, that they'd do really well. So, I believe that we'd need to be a public company for 5 years and show publicly the way we'd always behave privately in terms of how we operated the business and the opportunity. And we thought that ultimately the market would start to understand, the seriousness of purpose that we have, and how much we have and we do apply ourselves to building the business. And look, when the pandemic started, I think our stock fell from maybe $1.20 to at 1.60 cents. One of our Australian shareholders who holds themselves out as a value investor sold a bunch of our stock, 2 million shares at 72 cents. And they'd been at pains to explain to me that they were investors, and I didn't know at the time, but they sold the stock. And I'm thinking to myself, well, when I found out later, I'm thinking, did anyone really think that the government was going to wind up the tax system come a pandemic? They never did in a world war. They kept collecting their taxes, so why would they wrap it up in a pandemic? So look, I always thought that we'd have to become a listed company, perform through the cycle in good times and bad, and over a 5-year period, which I took directly from Warren Buffett. He said, don't judge us over a 5-minute period. We believe 5 years is an appropriate period. So we wrote a 5-year plan and communicated it. We're very, very transparent. We've got very clear accounts that I think anyone can really understand our business. And then we just went about the business. Now, over time, Buffett talks about, the market being a voting machine in the short term and a weighing machine in the long term. I think that's true. I've always thought that's true. I own over 50% of the stock personally with my wife and our family, and I intend to grow the business, significantly over a long period of time. And so our shareholders know that, they're partners with me and our team, and that we're serious about what we're doing. And I think, the stock still, is, I think, considerably trades considerably below intrinsic value, but that's a great opportunity for people that want to be quality shareholders with us over the long term.
Yeah, fabulous answer. Thank you. You've talked a little bit about the owner's manual, and you've definitely made clear that people, culture, and your partners are very important to you. Most businesses share their company values publicly, but not many are exemplars. Like every company has their mission and their values, but perhaps their actions don't always line up. You began Kelly Partners with the intent of performing through better behavior. Is that right? And if you could tell us a little bit more what that actually looks like in practicum. What does it actually mean when you're doing that through the business?
Yeah, so we believe that our core ideas of wanting to do the best for other people, so use our gifts and talents to help other people, our people first, and then our clients, and then the communities that we operate within, to be people that kept our promises, did exactly what we said and a bit more, and understood that a team can always do more than an individual, is just critically important. That we consider them big ideas that, if they are lived out in terms of recruitment and training and day-to-day behavior, that over time there's a compounding effect to that. So, we don't believe that anything's perfect, but we do believe that those big ideas are very good, deep, strong ideas, and that if activated in a consistent way, really, frankly, at any, to any degree, are going to make a very large difference in people's lives and obviously in the business. And so clarity of our mission, existing to help private business owners, our people and communities be better off, what we call be better off. And then the clear ideas in terms of our clear values and a clear vision. We think ideas matter, that ideas lead to actions and actions lead to habits and habits are your destiny. So, it's interesting. There's a lot of talk about, okay, well, did this business do this thing that it said it would do? Well, firstly, let's make sure they have the right ideas. And then, if you've got the right ideas, and then you've got a good chance of, from time to time, at least those ideas being actioned. And if that happens consistently, you're going to get a compounding effect of that. So while we don't think that we're perfect at anything, we do think that our ideas are very clear and very strong, and that there's a real benefit in having that clarity and the strength of those ideas, moving through the business over time. And we think that gives us a very deep, long-term competitive advantage, frankly. In a sort of fuzzy world, most people are a bit fuzzy about who they are, why they exist, and, what they're trying to actually achieve.
Yes, and so these principles and the way you're helping people be better off, and of course all the lessons from Buffett and these other super investors are helping build your business and your partners' businesses. And there's another author that I've heard you've mentioned that you have read more than once, and that's Chris Mayer, and he's joining us actually at the summit to talk about finding 100 baggers. His book 100 Baggers has been a valuable read. Can you tell us a little bit more why you think so, and why you've read it more than once?
Yeah. Okay, so 100 Baggers is a tremendous book. If anyone hasn't read it, do yourself a favor and read it. And why do I like it? Because what Chris has done is sort of taken a bunch of ideas, backed it by research, as to the way I think about it, Lee, is not that you want to get 100 times return on every investment you make, but he sort of says, well, use that as a framework to think, if I'm making this investment, can I get 100 times return? And where Buffett and Munger talk about, you only need 5 or 10 good investments in your whole life. So be careful, be focused, and be very diligent. Mayer sort of backs that up in terms of, a very good investment can have a very, very outperformance, and that performance can be much, much, much beyond what most people expect. Now, there's a guy, Botha, Botha, runs, I think, Sequoia Capital in the venture capital space. He also did a podcast, which is worth people looking up, where they mentioned that they realized as venture capitalists that they were building these great businesses and selling them too fast. If you read another book by Steve Schwarzman called King of Capital, on his journey with BlackRock, he says there's only one guy with a better business than me, which is Warren Buffett, because we fixed all these great business, but then we had to sell them because the structure of our funds mean that we ultimately can't be super long term. So the lessons of Botha and Schwarzman and Buffett, and frankly, anyone else who's really genuinely outperformed in the long term, and we love Will Thorndike's book, The Outsiders, which we also think proves it up, is that being super long term, being in great businesses with aligned managements that share your values and actually are in industries that are likely to be around for a long time and know actually what they're doing, can have very, 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 very outsized returns. So do you need to get 100 times your money? No, you don't. But that's a good framework for weeding out the things that you might just be tempting, you to trade, if you like. And so what I loved was, I just kept saying to myself, well, if you compound your capital, because, my mindset's that of an investor, I put my capital, which was my talent and my interest and my effort and some dollars into Kelly Partners Group when I started. And I said, well, I want to be, the Buffett of accounting, the Warren Buffett of accounting. So how do I do that to become the first choice, person that you would sell your firm to if it was an excellent firm that you really loved? Right, build it in the right way, and understand that if you compound at 30% for a long time, then even though your numbers are tiny, over time, emphasis on over time, they probably add up to quite a bit. And to me, that's the intellectual challenge of activating these ideas into, repeatable habits, or repeatable actions or build habits that actually make a genuine difference. And then the dollars are just a scoreboard that sort of show that that's kind of working quite well. So basically our IPO growth rate, since IPO, 33%, annual growth rate since inception, you can see here. So we think it'll take sort of, I don't know, X amount of years to become 100 bagger. And so a lot of people criticized us when we sort of published this in our documentation. There's sort of the next slide, Kenny, that shows we love frameworks and scoreboards to test ourselves against, Lee. So we looked at the 100 bagger checklist and said, okay, we've got to have extended high growth. We've got to have PE ratio expansion. There's always got to be more room for growth. So massive market here, massive market in New Zealand, the UK, Canada, and the US. So look beyond earnings, buy right and hold on. High consistent returns on equity. We've had 40% plus ROE forever. Owner-operated companies. Owner-operated companies, a great book called Founders Mentality by Bain & Co. that shows that founder-led businesses in the US listed founder-led businesses in the US over the last 30 years have had 9 times the returns of non-founder-led businesses, which is very interesting. High gross profit margin. We've had a GP margin above 60% always, which is industry leading. 100 baggers don't favor a particular industry. So a lot of people had said to me, oh, Brett, you can't do that in accounting. And I'm like, okay, so you're getting a lot of criticism if you're trying to build something. It's a bit of an Australian thing, I suspect. But I thought when I read this, I was like, okay, well, the data shows that that's possible in any industry. So that's encouraging. And then share buybacks accelerate returns. We've done some buybacks since we listed, so that we've got an exact equal 45 million shares on issue. And I think there was a question you sent me for later, but if anyone said what's the number one question you should ask a CEO of any company, but certainly a listed company that is likely to be predictive of your long-term return, I'd say ask them if they can tell you how many shares are on issue, because they'll talk to you a lot about profit numbers that are up, down, adjusted, inside out, and backwards. But most of them have no idea, what the denominator is in terms of number of shares on issue, and that proves over time to be very, very important. So couldn't recommend 100 baggers enough. We try and find frameworks that can focus us and hold us to very high standards and push us to think more broadly, more deeply about the business. And Chris's book definitely has done that for us. I've read it many times. And I always recommend it to people. In fact, I bought about 50 copies and I give it to people for free to try and help other people think long term, which makes it easier for me to hang around them.
Wonderful. And I'm sure Chris is going to be very grateful to hear those kind words. Of course, we've been talking a lot about longevity, and you're not just focused on your business, you're very focused on longevity and your well-being too. What are the habits and rituals that you're following, and why? And what impacts is that making in your life and in your work?
Yeah, it's a great question. So firstly, I set up a 25-year plan. It used to be a 30-year plan. I got that from a great book called Toughen Up by Michael Hill, who founded Michael Hill Jewelers. And he said, you need a 30-year plan. So I've been doing that for more than 15 years. Now I've made it 25 years because I turned 50 in 2 years' time. And I think, I want to have a plan to 50 to 75 to 100. So, 25-year plan, and then break it down into, well, what are you going to do over the next 5 years? Book called 3HAG, which I've turned into 5HAG, hairy, audacious, or highly achievable goals. And then build that out into a model for your health, wealth, and wisdom. Turn that into what you're going to do annually and quarterly and weekly, and then daily. Set up what's called an ideal week, so you know exactly what you're going to do between 6 and 6 sort of every day, or 5 and 7 every day forever. And then I believe habit is sort of the master key to mastery. And so building those good habits so that you're doing the things that are the most important. I focus on the 3 most important things to do every day. I carry a little card around with me that has my goals on it, which is a bit naff. I stick it to my driver's, the wheel of my car, so I can look at it when I'm pulled over, so that I'm very, very, very clear on what we're trying to do. I gave up alcohol 27th of December. I just don't drink anymore. It's a waste of time. I'd go places, people go, do you want to drink? Do you want to this? Do you want to that? Never been a big drinker, but I was always a non-drinker. So I've done that, and I do 10,000 steps a day, because now, Buffett talks about the best way to get the best compounded return is to live to 100, because he's, I think more than 80% of his net worth has come post 60, just through compounding over time. So if you understand compounding, like Munger, who's an inspiration at 98, you want to live a long time, you want to live well, look after your relationships and your health. And, to me, you can't be a better professional than you are as a person. So it's very important that you're working on yourself as a person, and that you're aware of your failings and you're trying to improve.
It's amazing. And Brett, it's clear that you've read every book ever written from this conversation, because every answer just you're flying through all the names and titles of these books that have influenced you. What books are must reads in your opinion?
Yeah, it's very interesting. So I think that learning is, well, I know that from the Gallup strengths test that we use right across the business, which came from a book called Now Find Your Strengths by the Gallup organization, who started as a polling organization, that strength test is incredibly predictive. So anyone that's listening to this today, do that test for yourself, but also do it for your kids. It's incredibly helpful, and your wife. My number one strength is learning. And, I remember an old speaker when I was back doing my book, he said that learning leads to earning. But more profoundly than that, at the end of the day, in terms of who do you want to be when you grow up, I hit on this idea of I wanted to be, somebody in the pursuit of wisdom and to become a learned person, because I thought that was a high bar for a meaningful life. And so I love to read. It's not everyone's thing, but it's the thing that I love to do, because I love to get great ideas. And even more than read, I love to execute, because I love to take an idea and see what you can do with it and try and reimagine it. I do have a real power habit, which I've developed over time, which is I write to the people that have written the books that have made the most difference to me, and I just tell them what I did with them and say thank you. I believe that thank you cards are an underutilized, incredibly powerful tool to remind yourself, as to where you've got to, where you're up to, and the difference that other people make. And so the big books for me are these books, the Warren Buffett Way. So it was of Common Stocks and Uncommon Profits, the Warren Buffett Way, Charlie Munger's Almanac, the Essays of Warren Buffett, Snowball, Dando Investor, Outsiders. All of these books that I'm sharing on this slide. Titan by Ron Chernow talked a lot about. I loved Rockefeller's sort of acquisition strategy. It influenced me very strongly around how to do acquisitions and the mindset to take to that, and all the rest of it. The commonality between what I call universal wisdom, the big ideas, is staggering. And so the more you read, I think you get some pattern recognition, you get inspiration. They're incredibly cheap. Good to Great's about $40, maybe $25 secondhand. Maybe somebody will give you a copy. I'll give you a copy if someone asks. Your return on investment from a book is just staggering. And so, I always had a rule with my kids, which I still have, that if they ask me to buy them a toy, I'll probably say no. But if we walk into a bookshop, which I always take them into, I will buy them any book they pick up and they want me to buy. It just does not matter what it costs, because the return on learning is unlimited. So, I must say that in my journey as a sort of listed company CEO, I consistently met investors that had just not read anything. We now have a register that is largely global. So some of the world's best investors globally, including Lawrence Cunningham, and certainly William Thorndike, that wrote The Outsiders, has publicly acknowledged that his fund is a shareholder, and many other amazing people. And if you ask me the difference between the best investors I've met and the rest, or the best anything I've met and the rest, is their commitment to learning. So I just meet people and they couldn't understand what we're doing, because frankly, they hadn't made the effort to educate themselves about investing. And so when something really great was right in front of them, all they could do is tell me what everyone else said. They didn't have the frameworks to think through sort of, what somebody like me would say, and literally what we're doing.
And that's incredible. There's a lot of great books there, and so many more. And thank you for sharing those. It's very clear, you've got a lot of energy, and you're pouring a lot of yourself into learning and growing this business and helping everyone around you. And I have this question for you that sort of deviates from the business side of things. When I was coaching athletes, this is what I was doing in my earlier career. One of the key lessons we wanted them to absorb was that everything costs something. There's no such thing as a free lunch. And that means that, you know, success is earned. It's not given to you, and you've got to pay a price to earn that success. So how do you think about that? You know, as you've built this business from, you know, a pure startup to where it is now, and the constant learning and growth that you're seeking?
So Lee, I think about like the most important word virtually in anything you want to do is sacrifice. It's a very old-fashioned concept, and not many people are into it these days because entitlement's kind of more the cultural norm. But we live in an incredibly, you know, free country that is largely for all people safe and has more opportunity, even for the most disadvantaged people than I think exists in almost any other country in the world. And so the difference for any of us between sort of where we are and where we want to be, not just in business but life, is just, are we prepared to sacrifice, you know, one thing for something else? And so I love this idea. I try to teach kids around reward for effort. You know, in that if you're the no, I never thought, and I still don't. I've never said to anyone that I think that I'm smarter than other people, although I'm not a fool, and I know that I'm, you know, blessed to have the mental hardware to learn and comprehend things. But the fact is that you can you know, I always said if I wrote a memoir, I'd call it Try Hard. I've just always been prepared to try harder than other people, and have been much, much more hard-headed and determined about trying to finish things I start. It was a lesson I got from my dad, and trying to understand that there's this huge internal reward for doing things properly and to the best of your ability that makes you feel good about yourself because you have this deep competence. And that confidence rooted in real, you know, genuine competence is kind of the ultimate reward in life and is a lot of fun. And so as you develop that, you tend to put more effort into things, and you get this great feedback, and that gives you the sort of quiet confidence to keep going. And so you know that the person that never stops and that won't give up is normally the person that prevails in any pursuit, and that pure talent isn't the ultimate ingredient required to do anything, although, you know, extremely helpful, not to be underrated. So, you know, again, I'll never forget Buffett says you can't control the macroeconomy, but you can control yourself. So worry about the things you can control. So be the fittest you can be physically, you know, mentally, um, you know, do the work, focus on the things that you can control. Know that no matter what the race conditions, you want to turn up the best version of yourself that you can be, to give yourself the best chance to perform at the best level that you possibly can, notwithstanding the weather, notwithstanding anyone else's performance. I would say I was lucky that I played a lot of sport, and I knew that you had to control your own emotions. You had to control your own engagement. You couldn't be distracted by other people and how they were feeling about themselves or their performance. And that's made, you know, I think that's an excellent preparation for life. So it does, you know, choice to do one thing is a choice not to do something else. I've spent a lot of time on, you know, my professional development, on the business, and the choice to spend that time on this thing has been a choice not to, you know, a lot of people I've known have said, well, Brett, you don't really have a life because you're so committed to what you're doing, but they don't understand the life that you get from being very excellent at something. And that life's, you know, particularly rewarding in terms of the difference you can make to other people. So look, I think we're on the same page there. Everything costs something. There isn't a free lunch. You've got to make the effort. It's a bit old fashioned these days. You know, a lot of people think there's some software or some shortcut or double click that will get you to somewhere quicker than, you know, might might otherwise be. I'm not sure that that's true. I still think even the fastest growth tech companies, my sense is they just work more years in a day than most people do, and and it's basically takes the same amount of effort to be excellent no matter what you do.
Yeah, amazing. And it's clear that you are putting it in the effort, and I'm sure all your team are too as well. Speaking of the team, I'd love to get back to Kelly Partners. And historically, we've mentioned the growth has been impressive, but let's look at the future. Where is Kelly Partners headed, and what's your vision? How big can it actually get?
Yeah, so the challenge in our industry has generally been there's been an obsession with size, and size isn't necessarily a predictor of excellence or a result of excellence. It can just be the result of sort of empire building size. So we believe that we need to become a top 10 firm in Australia by revenue, and we believe that we certainly will do that imminently. We'll continue to be very focused on sort of accounting, tax, audit, business advisory, finance, insurance, and wealth, what we call complementary services and estate office. So we think we have a very settled business system with a clear target market, with an excellent offer to that market, both for talent, the clients, and the communities. And then we think we've genuinely got a flywheel that is working. Now we believe that complementary businesses we can scale out, and that they'll convert over to about, for every dollar of accounting revenue, there's probably another 50 cents of other services over the long term. We're not in a rush there. We'll just let that sort of naturally find its own level. And that, ultimately we think that to win, we need to show private businesses, our clients, we need to inspire them and say that the future growth markets are really exporting into the US and the UK and probably other places. And that, like the businesses that we very much admire, businesses like McDonald's, for example, that are global businesses, we think that there's an opportunity to take the model that we've developed that is so unique and does deliver really strong benefits across all stakeholders onto a global platform. That's really what we're trying to build, is a platform that improves accounting businesses, the lives of the partners, the people, the clients, and the communities, and to be able to do that, first in English-speaking countries, largely Commonwealth countries that have similar systems to ours. We're not going to do that quickly. We're inspired by companies like Berkshire Hathaway, LVMH, and Constellation Software. Constellation's done 717 acquisitions over now 27, 28 years in the vertical market software space. We've only done 60, so we think that there's a bit to go. We're very inspired by them. They're in about 45 countries. But again, we're not in a rush. We typically are focused on $2 to $5 million revenue businesses. Constellation's average transaction size over that 25 years, about $3 to $4 million US dollars. So very similar programmatic acquisition mindset. And that, people probably don't appreciate how serious we are about the business that we're building and the long-term impact we think we can have, because we know that there's no firm solely focused on assisting private business owners, with a global platform that's performing at the level that we're performing at.
Yeah, and speaking of Constellation Software, if our viewers don't know much about it, it's been called the Berkshire of software, and you've mentioned Lawrence Cunningham, and he's now part of the Kelly Partners board. Can you share a bit more why you're fond of that business and what you've learned from it, and how the addition of Lawrence to your board came about?
So the three amazing businesses, above all of them, there's a whole bunch of businesses that we've looked at. So, at the mission sort of values and vision, strategy and structure end, it's Berkshire, Louis Vuitton, Moët Hennessy, and Constellation Software. Berkshire for the holding company type of structure, quality shareholder, permanent owner of businesses mindset. LVMH for their ability to buy great businesses and improve them through some centralization, but also autonomy, with a focus in a clear industry, which for them is largely luxury. So for us, chartered accounting, so public accounting for private businesses. and then Constellation for their programmatic acquisition ability. So where LVMH has bought larger businesses over time, like as they've gone along, they've followed that traditional path of making larger acquisitions. Constellation done 700 deals that on average are $3 to $4 million in revenue. And so for us, we were constantly getting asked, Brett, when are you going to do bigger deals, sexier things, buy big things and get people excited? And I'm like, well, we're never going to do that, because with an investor's mindset, it's better to own 700 businesses, none of which are large enough to blow up and cause you any problem. It's a diversified portfolio of businesses that are cooperating, that retain the entrepreneurial spirit of those businesses, where we can genuinely add huge value. So it just makes more sense to sort of do it the way we're doing it. And in reading Mark Leonard's shareholder letters, if anyone hasn't read them, they're really worth reading. I sort of found a kindred spirit in him in terms of his mindset and his approach, and his many years. I think they listed in 96. We listed in 2006. So they're 2017. So they're 20 odd years ahead of us. But that's now a 40 billion market cap company, and we think we can learn an enormous amount from them. So I was during one of the lockdowns, I think I was working from home, and it wasn't lockdown. I was in the butcher actually. I got an email on a Saturday, and it said, "Oh, dear Mr. Kelly, it'd be really nice to have a chat." And I saw it was from Lawrence Cunningham, but I thought it was somebody emailing me about Lawrence Cunningham, that it wasn't actually an email from him. But as I was standing there ordering my sausages for a barbecue, I was reading it and worked out that it was actually email from him. Dear Brett, I've read your Quality Shareholders newsletters that have been forwarded to me by one of your shareholders. I think they're really great. I'd really like to have a Zoom. So I was like, well, that's really amazing. I'd really like to have a Zoom with you as well. Like, this is a guy who's, has personally met many times Warren Buffett, wrote the very first book on Warren Buffett, The Essays of Warren Buffett, where he summarized those by topic. And then Warren presented at his corporate governance symposium that he put these essays together as actually conference notes rather than a book at that time. So he's an incredibly interesting gentleman with an amazing background, and obviously sits on the Constellation board. So we became friendly. He looked at the company. We met with him many times over Zoom. And then I said to him, well, it'd be amazing if we could get you onto our board, if that was like a tiny, little irrelevant Australian company like us, if you saw enough in that to warrant that. And he, said to me, Brett, I think what you're doing is incredible. Just keep making many small deals. And he was the very first investor ever to say that to me, Lee. Like, I went through all the pre-IPO investors, all the IPO investors, every other person that I'd met in Australia who's an investor or holds themselves out to be one, and not one of them had ever said that. Like, 99% of people you speak to in Australia don't even know who Constellation are, which is really interesting. And this is a company that's, that is 100 bagger, more than 100 bagger. So it's a pretty good story. So he said, if you can win in Australia like you are, that's a very small, tough market. You can do this in other places. I went to Omaha for the Berkshire meeting. He introduced me to a guy called Mark Miller, actually, who ran the first company that was acquired by Constellation. He now runs one of their 6 operating groups. He's grown that from, I think, about 25 people to 11,000 people in 45 countries. And Mark basically sat us down for an hour and a half and just told us what he thought about our business and what we'd need to do to grow in the way that he's grown, which is, I have to tell you, A, humbling, B, just mind-blowingly exciting, to get around people who, have walked that journey and genuinely believe in what you're doing. And so, for me, everything's internal leading to external. You have to have the internal belief and ideas to take the action, to build the habits, to actually make things become what's in your mind. And so both William Thorndike, in terms of him writing me an email and saying, hey, I'd love to talk. By the way, I can see your flywheel's working. And then literally within 10 days of each other, Lawrence writing to me and say, hey, read your Quality Shareholders letters. What they've done is just improved our quiet sort of confidence about, the rationale for what the investment thesis is, the way that we're pursuing that, and just give us a quiet confidence to push ourselves to sort of execute at an even higher level at some scale over time. for anyone that listens to us, just so that they understand, like, we're not going to go and do anything crazy. We're not crazy people. We'll buy a firm probably in Los Angeles. It's 2 to 5 million in revenue. We'll see if we can mess it up without losing any money, because, you know, Buffett, rule 1, don't lose money. Rule 2, don't lose money. Rule 3, don't lose money. So we'll just quietly look to London and LA as places that we could probably test our thesis. Our largest shareholder is actually London-based, has done a lot of work on that market, and has said to us, Brett, like, why aren't you here? And I'm like, well, we're, you know, doing a proper job here, but we'll have a look with you. And so again, we're responding to, you know, what intelligent quality shareholders are encouraging us to think more broadly and more deeply about what the opportunity to make a difference is.
A fantastic story and well earned, and it makes me excited. So congratulations. I'm very conscious of your time. You've been very generous, Brett, and we've got sort of one more question, and I'll bring it back to investing. You've talked about how being an investor is very important as a CEO, and as such, you are acquiring businesses and thus investing in businesses for Kelly Partners. What advice would you give an investor who wants to learn and improve their performance? And, you know, similarly, what advice would you now give to your younger self, going back to perhaps the beginning of that 30-year plan?
Yeah, I was just in a meeting, Lee, where, you know, I recounted to somebody that Bill Gates and Warren Buffett are in a, I think it's a special Inside Bill's Mind that's on Netflix, and they're asked at the same time, you know, what's the one thing that makes the most difference to your business success, or that made the most difference to your business success? And both of them in unison said focus. So rapidly, one-eyed, deep focus on becoming the very best you can be at something. It's very difficult to, you know, to win the US Masters golf and then turn around and win the US Open tennis, even if you have the talent. So, you know, beginning, I think, with Adam Smith, Industrial Revolution, specialization, you know, has better economic results. If you're an investor, you want to look at a CEO, ideally a founder, and you want to make sure these people know their business. They better know this business deep and broad and have an overwhelming passion and interest in that thing that they're doing, because ultimately when it gets hard, you can't fake it. You've got to be in there and you've got to want to do it, and you've got to want to do it because you have the passion for it and the interest in it, and you're convinced sort of in your soul, in your DNA, that the thing that you're doing actually matters and makes a difference, and that you take your responsibilities to yourself, your own conscience, and other people seriously. So that depth of the person that you're dealing with, you know, people can't. Growing businesses are led by growing individuals. Deep businesses are led by deep individuals. You know, the leadership and their values and commitment to the business matter enormously. One of the trick questions I alluded to earlier is ask a public company CEO, how many shares do you have on issue? Most of them don't know. It's pretty bad. And that's because most of them are sort of rent seekers that are just taking your money, and, you know, they're really there head in the trough. They're not there building the trough for others. They're just trying to, you know, get what they can and move on. And so it's not surprising that, you know, very invested, aligned CEOs, who are often founders, typically are better at building partnerships with other people as they've built their business, and so can get a better return for shareholders over time. And then you read these great books, you know, Common Stocks, Uncommon Profits, Warren Buffett Way, The Outsiders. One of the things that's in The Outsiders that I think is very interesting is, and not actually stepped out as sort of one of the major points of the book, but something I picked up was that all of the 8 outsider CEOs, and Philip Fisher would be one of these, you know, I think Mohnish Pabrai is similar, but they described as having pre-modern values. And I think of pre-modern values as being very much about your word being your bond, the quality of your craft as being very important to that person. Like intrinsic value of a business, the intrinsic value of doing a job very well as a reflection of your own personal values and your own personal sense of self and reputation. So not being a sort of gamer, it's just hanging around for a turn of the money or whatnot. So that's, you know, at the end of the day, life's a people business. You can have a tremendous business that will be badly affected by bad values. And equally, you know, when you look at the business itself, how likely is that industry, that business, you know, to be around in 100 years? How likely is it to give you a 100-bag return? I think they're all big threshold questions. And then, back to Warren again, you only need to make 5 decent investments in your life to do exceedingly well. And so, he has this term that concentration leads to concentration, and concentration is a tremendously valuable and helpful, frankly, habit to cultivate and character trait to execute from.
Brilliant. Brett, thank you so much for your time. Before you sneak off, I want to ask you one sneaky question that you've alluded to. How many shares do you have on issue?
Yeah, so I have 50.04% of the business, which is, I believe, Kenny would know for me, 21 million or 22,700,000, about that number. And what's interesting about it, from my perspective, is I've never counted every share that I own. I just am determined to hold more than 50% of the stock, because in Australia you can't have a dual class structure, which is a whole different discussion. I think the ASX is the only exchange in the world, major exchange now, that you can't. But for me, it's always been not about how many shares that I have, as long as it's 50% or more of the issued shares, but how many shares are on issue. That what I'm trying to get is a return on all of the shares, not just a return on my share.
Brilliant. Brett, we could riff all day about investors and personal development, but I've taken up enough of your time. Thank you so much for sharing everything that you've passed on to us. I'm sure the Australian Shareholders Association members will really appreciate this chat. All the very best for Kelly Partners, and if you could ever spare the time again, we'd love to chat to you and bring you to any one of our conferences or meetings.
Lee, I really appreciate the invitation. Investing is my great passion, so it's never a stress to speak investing, and my great love is the business that we're building, and I hope I've been able to adequately describe it for investors today.
You have. Wonderful. Thanks very much, Brett. And everyone, thank you and enjoy the summit.